There is one candle I trade off every single day, and it's so predictable, it almost feels like there's a glitch in the markets. And this one candle strategy that I'm about to show you has made me over $700,000 trading this year already, and it actually allowed me to catch one of my biggest wins of the year. I made around 40K on this one move, trading gold on Wednesday, and this was a perfect example of using candle behavior. And so in this video, I'm going to show you step by step exactly how I use this strategy every single day. And so first off, you've probably been in the scenario where you find a really nice setup, maybe had a shift in market structure with overall direction and a nice area of interest, and you go to take a sell, take the entry, stop above previous high, maybe targeting a previous 1 minute structure, just for that trade to stop you out immediately. And this is because you're missing the most important factor, because it doesn't matter how good of a trade you take if you're taking it at the wrong time. And so if you ever want to be a consistently profitable trader, well, you need to have a way to consistently time your entries. Just like how you find what direction it is or where you want to enter within that direction using market structure, well, you can actually use higher time frame candle behavior to tell when exactly to enter on that lower time frame market structure, because every single trade can be broken down into three main things. What type of trade are you taking? Is it a buy? Is it a sell? Is it a continuation or a reversal? Second is where you want to enter within that trade. Is it in the upper half, lower half of the previous move at an area of interest? And then thirdly is when you want to enter. This is the one thing that you're currently missing, is that you don't have a way to find exactly when to enter that trade. And if you think about what a candle is just time-based market structure. Just like how market structure gives you opportunities, patterns that arise within that, candles also give patterns throughout time. Just like how market structure is cyclical, goes from a push to a pull, it's a wrestle between buyers and sellers. Candles are also cyclical. They have certain patterns of behavior throughout the life cycle of those patterns. So candle behavior is simply how a candle moves throughout the life cycle of that candle in relation to the previous candle close. For example, if we're overall looking bullish and we expect that to continue, and we have the previous bullish candle close, we actually expect the next hourly candle to immediately push bearish to create the bottom wick first. And then again, the next hourly candle to immediately push bearish to create the bottom wick first. And so if we're looking for a pullback on that trade, we want to expect lower time frame 1 minute market structure for it to pull back within the first 0 to 15 minutes for then the continuation later on. And for an example of an easier way to avoid losses, let's say you have a really nice fractal shift here. You're a bit overextended, and we have a pullback in towards 50% of this previous move. Looks like a really nice type 3 shift. But if you actually were to zoom out onto that high time frame hourly candle behavior, you can see that this hourly candle has opened and then immediately driven bearish here, taken out the low of this low time frame market structure. But within context of the hourly time frame of these hourly candles, we're just creating a bottom wick to then flip and continue pushing bullish. So you can avoid this loss just by using that hourly candle behavior to tell when exactly to enter your trades. And so using almost 5 years of trading data, I found that the best continuations tend to be within the first 0 to 50 minutes of the hourly candle. If you're looking for reversals, the best reversals tend to be around 30 minutes into an hourly candle. And I'm talking about lower time frame reversals within middle time frame market structure. So if you're having a middle time frame, bullish trending range, and you overextend into the upper half of that bullish trending range, well, you ideally want to be looking for reversals around 30 minutes into the hourly candle. And so the whole point of candle behavior is to use it to time lower time frame market structure. You want to look for certain types of moves at certain times within that hourly candle. And so as price action is fractal, this actually applies to all time frames. It works on the hourly candle, works on the 15-minute candle, even the daily or the weekly candle. And you can stack and align them to find the highest quality trades. And so step by step, this is my most profitable setup. It is a reversal setup around 30 minutes on into the hourly candle. And we'll go into detail exactly how I take this. First off, for reversals, you always want to be taking a reversal within a range. If it is trending, you don't want to be taking a reversal. So first off, you want to identify, is price ranging? Well, over the past 15 plus hours, we have been pushing sideways, creating over 50% of that previous move. So I'll classify that as range bound. And so we want to wait for an hourly candle to overextend into either the upper half, around the highs of the range, or the lower half around the lows of a range. And we're going to be prioritizing sells in the upper half, buys in the lower half. Most traders think that range bound conditions don't have any direction at all. Direction is just sideways. But the main direction is towards the midpoint of that range. It is mean reversion. And so the higher you go within that range, you're more likely to reverse into and push bearish. The lower you go within that range, you're more likely to reverse and push bullish. And so combining that with this hourly candle behavior makes it really easy to find profitable setups. And so again, we just want to wait for the hourly candle to open here. And we want to see something very specific. Ideally, we want the open of the new candle to immediately push in the same direction of the previous candle without creating much of a bottom wick at all. We want it to overextend for at least the first 20 to 30 minutes of that hourly candle, which we have. Massively overextended, pushing bullish above previous highs. And we are around 22 minutes into the hourly candle. And so the best reversals tend to be around that halfway point of the hourly candle. The candle has opened here and it's more likely to pull back or reverse because we've kind of expended too much energy. And so around the halfway point of the hourly candle, we're going to be looking for a lower time frame shift in market structure for a bit of a pullback or correction in towards the midpoint, of the previous move. I just tend to target, around 50% of the previous low time frame move, around a 1.5 risk to warrant on average. You can see here on the previous hourly candle, we opened, immediately pushed bullish around the halfway point of the hour. We shifted, pushed bearish for a little bit of a correction to around 50% of this previous lower time frame move. I find this is the easiest way to catch small consistent profits. I'm not trying to guess the direction. I'm just trying to trade small reactions and price action. And so we approach around 30 minutes into the hourly candle. And exactly like how we look for the hourly candle to immediately overextend and push it against us to, when we're looking for a sell, you can actually do this for even lower time frame market structure. So I can look at 50-minute candle behavior here and look at, wait for the 50-minute candle to overextend to push bullish. And exactly like how it happened in the previous candle where we opened, immediately pushed bullish and then had a reaction in the later half, to correct that. We had the exact same thing happen here, immediately pushed bullish. And then around 7 or 8 minutes into this 50-minute interval, or, around 37, 38 minutes into the hourly candle, tends to be the best time to look for, a little shift in market structure. I tend to drop down onto 5 seconds structure, but we can just wait for a break of these 1 minute candle lows here. We can put our stop above the previous high, and you see we're stacking like multiple time frames of candle behavior. We have the hourly candle overextending, pushing bullish in the first half. We have the 15-minute candle behavior overextending, pushing bullish as well in the first half. And so if you have a shift in the second half for this 15-minute candle to flip, we can target around that 50% point of this previous move, around a 1.9R risk reward trade. And you're also having, combining that 15-minute candle behavior with that hourly candle behavior. So let's see. Yep. Okay, went a little bit further than I expected, but played out pretty nicely. And so as a recap for hourly candles, you want to be looking for reversals around 30 minutes into the hour, but you can also use the exact same concept on the 50-minute candle. You want to be looking for that 50-minute candle to overextend again against you, and then look for that to shift, push bearish, or around 7 or 8 minutes into that candle as well. And so how a candle moves is extremely important. If you have a candle open and immediately push in the same direction of the previous candle without creating much of a pullback at all, that's actually an indication that there could be a potential reversal setting up there. But of course, you do want to connect it with overall, market structure, middle time frame market structure, because you need to give context to any sort of trade you're taking. And so just moving on to the next trade example, this was the gold sell I took on Wednesday that made me almost 40K, around 39K. And this was using candle behavior in the exact same way, just on a little bit of a higher time frame. Instead of using hourly and 50-minute candle behavior, I was using daily and weekly candle behavior. So if we just jump onto, 5-minute time frame, and I'll get up the weekly time frame, we can see here that we've been pushing bullish for the first half of that week. We have the open on Monday here, and then we're approaching Wednesday. So we're approaching halfway into the week. So the best high time frame reversals will tend to be around Wednesday, sometimes maybe a bit Tuesday, late Tuesday, or early Thursday. And so as we can see, the previous week we had price open, immediately push bullish. And then when did you have the pullback happen? Around Wednesday, around the halfway point of the week. And so I was looking for the exact same thing this week for price to have a bit of a correction around Wednesday. And so I can further improve my timing by looking at the daily time frame. So how has price moved throughout this daily candle? Well, we've had the daily candle open, kind of go sideways for the first half, and then push bullish. So in general, we've overextended bullish in the first half of the daily candle. And so we're kind of expecting a bit of a correction, a bit of a pullback. If we're going to shift, or even if we're going to continue, it's likely we're going to have some sort of correction. And we might know that there's a bearish move that is likely to happen. But if we want to know when that move is likely to happen, this is where we go use that high time frame candle behavior, using that weekly candle behavior to prioritize reversals or sells on Wednesday, using that daily candle behavior to prioritize sells around halfway into the day. And so for daily candle behavior, the best sort of higher middle time frame reversals tend to be around London session. Second hour of London, third hour of London, but I would say second hour of London tends to have the nicest high time frame reversals. If you overextend, push in a certain direction for the first half of the day, that actually means, around, come London session, there's going to be a really nice setup to correct or reverse Tokyo's move. And so we're combining that daily candle behavior, looking for a sell in the second hour of London, with that weekly candle behavior of looking for a sell around on Wednesday. So London on Wednesday tends to be a really nice opportunity for high time frame counter moves. If you have the the first half of the week and the day immediately push in a certain direction. If you don't really have it push in a certain direction, it's not as nice. In this example, we did push bullish in the first half of the week, but we had Wednesday just kind of go sideways or immediately, pushing that. So you can have it happen, a little bit earlier than the second half of the week. But going back to this example here, it's very similar to the previous example of the 50-minute and the hourly counter behavior. And so I was just looking for a sell after this market structure shift. I put my stop above this low time frame high. And initially I was targeting around 50% of this previous bullish move here, around 50% of this previous bullish move. So a pretty high risk reward, but it was a really high quality trade. And so we had price push bearish, had a bit of a correction pullback. I did take my main position off around here, around a 1-to-1, but I left a runner just until the next day. So I hopped on the charts in Tokyo and I saw, price was immediately pushing bearish here. And then I closed for a nice 5R trade. So this was just that, example of the daily and weekly candle behavior, immediately overextending, pushing in the same direction of the previous, candle close, exactly like how it happens on lower time frames. And then looking for that around Wednesday, London session, second hour of London for that timing. It's just important to keep in mind that price action is fractal. The same things happen across all different durations of price action. And you can align as many as you want to increase the probability that the trade will work out. The big trade-off though is that, this is going to happen less often because you need a high time frame to align. And so also, I closed this early as well because we had the day immediately push bullish. And so I was, expecting maybe, it could continue, it could, flip, push bullish. Wasn't the biggest fan of that. So yeah, I did end up closing that early. So you can use candle behavior to time middle time frame moves, higher time frame moves to find direction, but you can also use it to time your entries to know exactly when you want to enter down to the minute using that 50-minute candle behavior, entering 7 minutes into that 15-minute interval. And then for the final example of using candle behavior for reversals, this is a really nice low time frame, middle time frame, and high time frame alignment. So we can see on the high time frame, over the past couple of weeks or month, we've been pushing very range bound, going sideways, correcting back in towards that mean. And so we can have a look on weekly candle behavior and we can see, when are we, how are we pushing throughout the week? When are we correcting? If we push immediately bullish into the upper half, are we going to correct, around the midpoint or the second half? And so when I say around the halfway point of the hourly candle, I don't mean exactly 30 minutes. It can be from around, 22 minutes to around 52 minutes. That's the general range I give because I'm also thinking about that 15-minute candle behavior. So 22 minutes into that hourly candle is also halfway point into the second 15-minute candle as well. So it kind of hurts your brain a bit thinking about fractal price action, but 22 minutes to 52 minutes. But around that halfway point is like the hot spot. So we can see here, this, weekly candle immediately pushes bullish for the first half. And then we have the shift reversal around the second half after we kind of push into the up half of the previous range. This tends to be better when you have price immediately overextend for the first half. And you want to keep in mind that price action is fractal. So a 22 to 52 minute move on hourly candle behavior is going to be like Tuesday through Thursday on weekly candle behavior. So, you can expect if you overextend really far, on Tuesday, maybe there's, potential setup around there, or maybe, it's a bit low volume, happens to be, taking a while to, go in a certain direction. It could happen around Thursday. But the sweet spot is around that halfway point. And so for this example, the first half of the week massively pushes bullish. The more it overextends against you, into either the high or low of a certain range, the better it is, the better the setup. And so this is a big overextension. If we have a look at the daily candle behavior as well, we can see that the daily candle opened and also massively overextended, pushed bullish. So really looking very nice. And then we can even drop down onto the 4-hour and see that the 4-hour candle has immediately opened and massively pushed bullish as well. And then we can look into coming into around that halfway point of that 4-hour candle. So price is so fractal, you can align as much as you want. We can see on this hourly candle as well, massively overextended, pushed bullish, really, really nice. So we'll just go back to kind of around the open of the hour. And so if we get up this 15-minute candle behavior here, drop down onto the 1 minute time frame. So we can see the open has immediately pushed bullish and these two 50-minute intervals have immediately pushed bullish. I kind of call this a high volume candle sequence and we've overextended above previous highs. When we're kind of low time frame or middle time frame is kind of more trendy directional pushing bullish or something, more kind of this sort of condition. The most important factor or, area you want to be taking sales against this overall condition is above highs. I only want to be looking for sales above highs, because that is the most likely point for us to reverse from. Whenever we come into or, just break above highs, that is most likely where we're going to reverse. And so in this example here, we are pushing bullish, breaking above highs. For this 50-minute candle behavior, massive overextension here. And then we're coming into around the halfway point of that 50-minute candle. What I would do, I would drop down onto low time frame because it's so high of a time frame. You can use this as a high volume candle sequence. And so for this trade, because it's so high volume and there's not much structured trade around, I would look for a high volume candle sequence into a high low entry. What does that mean though? Well, it's simply a series of candles where you always respect the lows. If it's a bullish example, always respect the lows. If it's a bearish example, always respecting the highs. And they all kind of close in the same direction. But the main point is that you're respecting the lows of that low time frame market structure. Because what this will look like on seconds market structure is that you're in like a low time frame trend. And then what we want to see is we want to see a 1 minute candle break a high and then immediately break a low of the next candle. What would that look like on low time frame on second structure? Because a 1 minute candle is a simplified version of seconds market structure, is that you will have that shift. So exactly like how we look for that on the 1 minute time frame, we can look for that on the seconds time frame using that 1 minute candle. And so if we have that break, we go from breaking a high into breaking a low, that signifies a shift in low time frame market structure. And just like how we want to see that, a 1 minute shift around 30 minutes into the hourly candle, you'd want to see a second shift around 7 minutes or 8 minutes into that 50-minute candle because price action is fractal. Again, if we drop down onto the 5 seconds time frame, we can see here that we've gone from breaking a high into breaking a low. And so a high-low entry, pretty simple shift. And so you can look to take the entry on the break of this candle low. Normally I'd wait for a pullback, but because this is seconds time frame and it's a high volume candle sequence, this will be like a high volume entry. So I'll just enter at the break of the low, stop above the previous high. And to see, respecting all the lows, very bullish, very directional. We've overextended a lot bullish. And if we go on to the 50-minute candle behavior, when does this happen? Around the halfway point of this 50-minute candle. When is this happening within the hourly candle? Approaching around the halfway point of that hourly candle. When is this happening in that daily candle? Approaching the halfway point. If I zoom out even more, approaching the halfway point of that daily candle as well. Where is that when the weekly candle? Approaching the halfway point of that weekly candle if you zoom out even further. And if you think about how that weekly candle is within that overall condition, which is very high time frame range bound, but everything above the highs of the range, well, this is probably one of the nicest scenarios that will can possibly play out using that candle behavior to time this entry, knowing exactly when to take that. And for these sort of low time frame seconds entries, I'll just tend to target 50% of the previous push bullish, or around the halfway point of that 50-minute candle. But obviously, since you've aligned so many time frames or so many durations of price action, you can target a lot higher, really high volume. So obviously, kind of plays out in our favor. And if we just zoom out a bit here and have a look, and then high time frame, pushes, shifts bearish. So this is kind of a pretty nice example of how you're aligning all different durations of price action, all different fractal price, low time frame, middle time frame, high time frame, using candle behavior off the weekly, the daily, the hourly, the 15-minute. But you want to connect that to the type of market structure, because you only want to be looking for a weekly candle reversal if it's kind of overextending above highs within the range, or even could be a bullish trending range and it's counter trend. And these are the two main tools I use every single day to create consistently profitable trades, just general sort of market structure and candle behavior. I just use market structure to define what type of trade am I taking. Is it a buy? Is it a sell? Continuation reversal? And then where I want to enter that trade using that market structure. And then for finally timing, easiest way to time entries is always going to be that candle behavior. When are you within that candle? How has that candle moved throughout that life cycle of that candle? If you've opened, immediately pushed in the same direction of the previous candle close, well, likely around that, the halfway point, or even a little bit later on into that candle, you're going to have it, shift, reverse, have a bit of a correction there, just around, the halfway point. There's going to be some sort of reaction. And I'm not trying to guess direction. I'm just trying to trade small reactions and price action. And I found that, the most probable chance for a reaction to happen, for it to correct to the previous move a little bit, is going to be around the halfway point of whatever candle it is on that time frame. So hopefully this is helpful. I'll catch you guys in the next video. If you want me to cover any other topics, just leave a comment below. And if you want to use this, practice, collect data, test it out. It's a skill that you need to work on and improve, because it can get pretty complicated as you're connecting, lots of different time frames. But I'll catch you guys in the next video.